Hello and welcome to the Investor's Guide to Asia, where we dive into what's going on right now in markets and bring you the most interesting investment stories that we're watching from across the region. I'm Stuart Rumble, Head of Investment Directing for Asia Pacific at Fidelity International.
Hi, I am Taosha Wang, multi-asset portfolio manager. In today's episode, we will talk about is Chinese consumer sentiment finally coming back after a few rocky years? And can it help to deliver the kind of growth that the government as well as investors are looking for? So Stuart, are we seeing Chinese consumer sentiment coming back?
It's a great question, but it's a really difficult one to get a handle on. I certainly think there are some really strong evolution of trends coming through. You know, looking from the outside, that stereotype of Chinese consumers spending lavishly on luxury brands is long gone. Certainly today, they're much more cost conscious and focused on the value proposition of what they're buying. They're looking forward to buying, products with emotional value and focused on experiences, and they're very happy to buy local brands as well.
Let's welcome our guests today, two very knowledgeable equity portfolio managers, Cynthia Chen as well as Nicholls.
Hi there.
Thank you for having us.
Cynthia specializes in investing in Hong Kong and Greater China equities, and Dale invests in China equities and regional Asia equities as well.
Before we kick off the main discussion, quick questions to both of you. Are Chinese brands cool now? And how is that changing the behavior of Chinese consumers?
Well, it's a very interesting question to discuss. Obviously, depending on how you define cool, my interpretation of cool is something being liked, but perhaps a bit non-conventional. So from this perspective, yes, I think indeed a lot of Chinese companies are trying to differentiate, partly driven by competition. And a lot of them are actually getting rather successful, gaining tractions, gaining market share from international competitors.
When I hear that question, there are always cool brands. And that's what's actually great about the consumer sector. There are always brands that are hitting it with the consumer with the right proposition and are gaining market share. So, I think that's always the case. I think what's changed a little bit, as Cynthia sort of touched on, is that you've got some brands that are really going offshore and doing well offshore in the overseas market. So I think that's probably why they're getting more recognized. And for different reasons. Some have got the right brand proposition. Obviously, some are very cost competitive if we're talking about sort of the EV brands, etc. So for different reasons. But I think the fact that, we're seeing some of the brands really be successful offshore.
And it's really sort of evolving from some of those more traditional export goods sectors to things like cutting edge technologies and more creative brands, which is really interesting. But it's been no secret, though, that the last couple of years have been very challenging for the Chinese consumer sector. And I mentioned the complexity that lays behind some of that. A lot of macro trends at play. Dale, maybe you could just give us a little bit of a summary of the key macroeconomic forces behind consumer behavior in China right now.
A lot is made of the consumer sector. If we're sort of stepping back and talking about macro, the fact that consumption is a relatively low portion of overall GDP relative to other factors when we compare to other countries. What I think is sometimes missed, though, is that, if we look at, this decade, the growth in consumption has actually been pretty strong. It just hasn't kept up with other parts of growth, for China, obviously, net exports, and investment. But there is the hope will be that consumption, will sort of take a bigger portion of the economy. Having said that, as we've talked about, there has been relatively weak consumer confidence sort of towards the end of COVID. We've kind of, it's dropped a lot and then kind of flatlined. When we analyze what's probably been behind that, I think the two biggest factors would be expectations around incomes and expectations around asset prices. I'm sure we'll get into the individual factors there, but clearly what's happened with property prices hasn't been a positive factor for the consumer mindset. So to put things in context, not as bad as people often make out, but the hope is that things do improve.
I really like the way you put it in a relative context, comparative context. So, comparing Chinese consumption versus other parts of GDP, comparing current Chinese consumption to, historical Chinese consumption, especially in terms of their growth rate, and comparing Chinese consumption to the expectation of Chinese consumption. I think all of these, the relative play really helps to shape the market narrative and then obviously the price action. Question to Cynthia then. What does it take for a Chinese consumer to spend more?
I think, as Dale mentioned, wage growth, expectations, and asset prices, those are having a little bit of a downward pressure on the consumption or on the confidence. But there's another factor. I think it's not necessarily negative and less talked about. I think it's the increase of purchasing power for every dollar consumers have. So basically, in a lot of areas, over the years, the trend is that with the same amount of money, you can buy more or better product. Say, for example, in consumer electronics, auto, apparel, food to lesser extent. It's not that they don't want to spend more. It's not that they don't have the money to spend more. They don't need to spend more because the overall satisfaction as consumer are enhancing, even if the costs stay constant. So, but of course, behind this phenomenon, there are a few drivers. I think there are positive ones, negative ones. Negative ones being, say, for example, overcapacity and competition, right? Businesses are squeezing their margins and consumers benefit. But there are also positive ones like productivity enhancement. That's for sure, right? And also innovation. The number of product offerings, the variety of product offerings are increasing, which is definitely contributing to the greater satisfaction of consumers.
It's the psychology that I'm really interested in, those sort of early comments. And, sometimes it's just that actually some higher prices or pricing pressure is enough to get people to spend a little bit. We've obviously seen trade-in schemes for goods that aim to do a little bit of that. And Dale, I know when we've spoken, you've mentioned in the past that, somewhat higher property prices might be, a way of instilling a bit of confidence back into the consumer. Do you see any sort of specific triggers? You mentioned asset prices, property prices, income. Is there anything that you would point to that really could be a trigger for improving consumer sentiment?
Yeah, I think you'd have to build on those points that we talked about. So I do think property is important. It's still a significant asset on the balance sheet for a lot of consumers. So I definitely wouldn't have the base case that we're sort of going back to the heady days of the property market, but I do think there's pretty good potential for pricing to stabilize, and I think that needs to be become part of the mindset for the consumer that that's not going to be a drag. And I think there's pretty positive signs now, right? If you look at tier one city primary property pricing, we've stabilized clearly, in the last 6 months. I think that just needs to extend. I think the setup is okay. Obviously, it's a priority for the policymakers, and you also have to just recognize that supply itself has been reduced a lot. So from a supply demand perspective, I think the outlook has definitely improved significantly. So I think on the property side, there's decent potential for things to stabilize. With regard to incomes, I think the biggest factor there is going to be earnings growth for companies themselves. I know for the companies that we look at, we're forecasting pretty, positive earnings growth. So I think, a lot of those companies will be definitely looking to give more of that back to their employees. So, hopefully there'll be more and more of those types of companies. So I do think there's reasonable prospects for things to stabilize and hopefully slowly improve, at least definitely versus expectations, as we've talked about.
Cynthia, there has been this, very significant boost to Chinese consumption from the trade-in subsidy scheme. How much staying power does that have? At some point, these programs are going to have to unwind. Does that just undo everything?
Yes, exactly. I'm personally not a believer of trading policy or subsidy policy. I think it's not generating effective additional demand. It's only pulling forward demand. But at the same time, it's distorting cycles and delaying the natural exit of obsolete capacity. So basically, it's only kicking the can down the road. From this perspective, I'm not a big fan of, all these policies. But of course, from, government's perspective, or perhaps from capital market perspective, there's always this trade-off between short-term comfort and long-term health, right? But for me, as a long-term investor, I'm definitely, prefer things that are sustainable in the long run.
Organic sort of growth path. It's time to take a step back from this conversation and hear from Fidelity's Asia Economist Peiqian Liu. Let's hear what she has to say about China as well as the rest of the region.
So China's growth in the first half of the year has been driven by two notable drivers. Firstly, the export resilience in time of tariff uncertainty. So export on aggregate is still contributing to around 15% of overall GDP growth. And the second driver that comes up is consumption, and more notably durable goods consumption. We do see retail sales of communication appliances as well as home appliances remain very strong at double-digit year-on-year growth for the first 5 months. And I think that momentum will likely to continue as the government is on the back supporting that momentum with bond issuances and subsidies. Going forward, I think we're looking for the signs of broadening out of this growth momentum, but we do see more headwinds coming through as well. So in the second half of the year, we do expect some form of payback effect from both export sector as well as the front loading of domestic demand that's driven by subsidies. So in that note, I think stimulus is very much still needed. In terms of timing, I think it's more likely that we will see a notable slowdown in economic growth before we see more counter-cyclical policy being announced. And more likely than not, we're going to see some additional fiscal easing in Q3 or early Q4 of this year. Tariff has been weighing on growth for sure. And even though we're seeing front loading of exports at this moment, providing some support to the resilience of growth at large. But we do see headwinds coming through, both in terms of a reduction in capex and investment intentions if tariff rates goes higher, as well as a payback of the front loading of demand when tariff comes into effect. So that means more headwinds in terms of medium-term growth outlook. And we think that with the strong expectation of domestic easing to lift domestic demand, which could act as a cushion to the external shocks that's to come. So overall, I think we are still expecting somewhat a stable growth momentum in China, taking all factors into considerations. So in the region, we're following the real-time trade activity pretty closely to gauge the impact of tariffs on the short and medium-term growth outlook. Meanwhile, we're also keeping a close eye on the momentum of domestic demand growth, as well as associated policy reaction to stimulate domestic demand, because we expect more countries going forward to look for diversified markets in view of the rising tariff uncertainties. Domestic stimulus in terms of fiscal and monetary easing becomes more relevant in this time for the region.
That was our Asia economist Peiqian Liu speaking to us earlier. It feels like the market these days have become a little bit desensitized from incessant news headlines on tariffs, trade wars, etc. What is the reaction function of Chinese consumer sentiment to tariffs and trade wars in general?
I think people are generally so used to the day-to-day changes on the headlines of tariff-related things. So I don't think there's direct impact on Chinese consumers, apart from, of course, it's hitting some of the exporters, and as a result, perhaps indirectly hitting some of the wage growth expectations. But other than that, I think domestically consumptions are generally more of a in an immune sort of situation versus day-to-day news flow.
And it's clear, listening to Peiqian, that some of the macro risks certainly aren't resolved. But markets, as you say, tend to be taking them in their stride this week, at least. And that kind of begs the question, what's the impact at the moment on companies and investor positioning? So maybe, Dale, turning to you, could you give us a bit of a summary of how the consumer stocks particularly, and thinking about the staple sector and consumer discretionary sector, have been performing this year in the market?
Well, if you're talking about stock performance, in terms of overall sectors, they've clearly lagged. There's been big divergence within these sectors, though. So, you've got some companies that have done actually quite well in the markets. The likes of the Pop Marts, the Xiaomi's, etc. of the world. Give them credit; they've executed well. They've been rewarded. I mean, a lot of it is in fact earnings driven. And then you have other parts of the market that have, been pretty much left behind. There's big parts of, the staples sector, that are supposed to be defensive, but haven't really acted that way. And you've sort of got valuations that are, very cheap versus their own history, but cheap versus the market as well.
Talking about, valuations in general, are we looking at, market expectations that are still, connected with reality? There are certainly some very distinct trends that have captured a lot of the, investor imagination. Pop Mart, which has, created this concept of designer toys out of just, regular toys.
1 second, have you got a Labubu there?
No, I am unfortunately not trendy enough to have one. But, if this thing keeps going on, I imagine I will have some Labubus hanging on my handbags.
Listening that are not aware, the Labubu dolls are the most popular thing to have on your handbags right now, as I understand it. My teenage daughters haven't got one either yet. So that addressable market has still got some room to grow then.
I feel like that's something for the dad to address for the teenage daughters. But also, Xiaomi combining sleek design with competitive cost, bubble tea, which is great to have in any time of the year, including summer. So all of these things, are they hype or are they real?
Yeah, it's a great question, and one that we debate internally quite a bit. As usual, the answer is going to be it depends. But for the IP based guys, as I said, it's something we debate. It's often hard to determine what is fatty and what is sort of really lasting IP, and that's sort of going to be the factor that decides if these stocks can continue to perform, I think. But as I mentioned, you've got to give these companies credit for how they've executed, how they've managed the IP. They've clearly done a great job, and it's clearly gone beyond just China. The way they're performing in other markets. So we'll continue to watch that closely. I think likewise for Xiaomi, they've done extremely well. You've seen the demand around, both models, that they've introduced. I think personally, there's still tough times ahead in the EV sector, just given the amount of competition. But again, give them credit. You also mentioned the bubble tea companies, which have also executed well, but I think you do need to think about the tailwinds that they've had from, the competition that's come through in food delivery. The big platforms are offering pretty significant subsidies. And that's something I think you also need to keep in mind.
And a lot of these products obviously are carrying a lot of emotional value for consumers. The dolls we just mentioned are a great example of that. Cynthia, what role do you think this emotional value is having in terms of consumption patterns?
Consumers are increasingly focused on perhaps so-called emotional value of things. Is a reflection of the fact that consumers in general are getting more picky and getting more sophisticated. So they are more focused on product itself, the features, functionalities, or emotional values that they can bring, right? Rather than simply on brand alone or brand of origin. Yeah, so that's the general trend. So businesses have to really work hard and try hard to really offer, competitive product or service.
Are you seeing, since you mentioned service, are you seeing that, potentially a bigger share of consumer wallet share going to services or travel,
For
etc.?
sure, that's the trend that we've already been seeing for quite a number of years, right? Travel, and I was talking to some of the colleagues. A lot of our younger colleagues are spending a lot of money on, watching shows, attending some of the drama or experience-related, activities. So those trends are gonna continue, I believe.
And these are some of the most exciting sort of brands and names at the moment in the Chinese consumption area. But Dale alluded to earlier that some of the staples have potentially been overlooked. So are we getting a little bit too focused on the exciting areas, Dale, and at the expense of finding opportunities in the sort of more staple areas of the consumer market?
I think so. A lot of these areas have been, it's kind of been forgotten, but you've sort of got, slow consolidation that's happening, whether it's beer, dairy, water, that consolidation has happened. And, I think, potentially the competitive environment is improving. You're seeing sort of pricing come through. I think of, companies that I own in areas like, carbonated drinks, the price increases they were able to achieve last year, which again, sort of hasn't been recognized in the market. So, everything is risk reward, and I think the risk reward is actually shaping up pretty well for some of the companies in this space.
What about the demographic trend? Because ultimately, consumption is fundamentally linked to demographics.
Yeah, I mean, demographics is definitely a challenge. I think in the midterm, and obviously China is not alone in this space. Obviously big parts of other parts of Asia and Europe, face the same challenges. I don't think it's a really big factor that we need to think about sort of in the sort of near to midterm. And there's actually China does still have some tailwinds in that area. Urbanization is still low and continuing. If we ever see things like hukou reform and that sort of thing, I think there's potential big upside to come from those types of actions if they play out. Just given the sort of, if you look at the different spending levels between migrant workers versus your normal citizens, it's pretty stark. So there's potential upside from that. So longer term, it's an issue. In sort of the next 5 to 10 years, other factors will be much more important in my mind.
And in terms of the external environment, we've seen a lot of these brands go global, which we alluded to before. Do the Chinese companies, Cynthia, now have an edge when it comes to innovation and growing their market share globally?
I think gradually the companies that we focus on, a lot of them are definitely, climbing up the valuation or, innovative ladder. I think most notable area is the entertainment industry, especially the content generation side of things, like the games, the music production, things like, movie, drama,
Short videos.
and, stand-up comedy,
Yes.
reality shows. Those are definitely seeing significant progress over the years. So that's on the content generation. And on consumer goods, we're seeing, local companies getting more and more competitive as well. Consumer electronics, Dale talked about some of the brands, going overseas, auto, sportswear, cosmetics, skincare. Those are areas we're seeing, local companies gaining market share from international competitors.
Cynthia, you mentioned EVs there. It's an area where we've seen significant price competition. There's a few sectors like that. What does that mean for the outlook for some of these companies?
Yes, I'm negative on EV sector. My concerns are on two angles. First is overcapacity. Second is the phase out of policy support. So if you look at the auto sector over the past 20 years, from time to time, governments roll out, stimulus policies. But every time you see that when the policy phase out, there was significant decline in demand. Just now I talked about policy distorting cycles, right? The bigger the ticket size is, the bigger the distortion. So auto is definitely one of the sectors that policy has distorted significantly. the EV sector has enjoyed stimulus policy for the entire 10-year recently. So imagine if the policy started to subside, starting from perhaps next year, things are going to really be challenged in a big way. And on top of that, the capacity utilization of the industry now is worse than 10 years ago and much worse than 20 years ago. The utilization rate is only like 50% or so. So going into next year, if the subsidy started to phase out, I think either we're going to see severe price competition, or the volume is going to decline significantly. Either way, it's going to be very negative to the EV players.
Very interesting. Do you see there's any kind of sort of winner takes all, or a handful of winning company taking the majority of the pie, whereas the many other smaller players die out? How does the pie get distributed? Because people tend to get very excited about Chinese EV taking over the world, and this is a very refreshingly different perspective.
Yeah, that's an interesting question. It's very hard to pinpoint and take a bet on which one is going to be the ultimate winner. Relatively safer way to play this is perhaps to choose some of the better positioned, solid component suppliers, whether it's battery or some of the key, powertrain producers. If they are trading at relatively, more reasonable valuation and the expectations are not that high, then you don't have to take a bet on which brand eventually survive, right? So on those angle, I think there might be some, good opportunities.
EVs are here to stay, and it's a massive sector, but perhaps, there's going to be a disruptive period of consolidation before. So you're saying sort of perhaps opportunities in the supply chain. Dale, I know you're interested in that part of the market as well, and looking further out, some of the exciting opportunities with autonomous driving as well. What do you see on the horizon for investors there?
Yeah, I very much agree with Cynthia on the point about things being more interesting upstream. And perhaps, as you've mentioned, one area that's underappreciated is, we talk about a lot of the cost competitiveness, which I don't think is disputed, for the Chinese players, but just the extra functionality that's being built on this path to autonomous driving. And China is just way ahead. Go and test a car in sort of level 3, level 4. It's really impressive. And I think, with much higher rates of penetration already in China. And then you've got the suppliers that are benefiting from that shift, and very, very competitive globally. I think you've both heard me go on about LiDAR in the past, but there's key suppliers in that area that I think are very well positioned to benefit from that shift, and we're really just on the cusp, right?
China offers a real mix of opportunities, short term, long term, but also some risks. We spend a lot of time talking about China, but it's not the only place in Asia where consumer brands have gained traction, and Japan and Korea have a long history of companies establishing themselves globally, and that continues to evolve. Dale, maybe I can stick with you for a second. What are you seeing in terms of other parts of the Asia consumption space that's interesting at the moment?
Yeah, it's interesting you touch on that because they're good test cases for the Chinese players. Obviously, there's sort of the big well-known names out of Japan, the Mujis, the Uniqlos, the Donkeys, etc. So they're good examples that hopefully we'll see some Chinese players play out in that space. And it reflects, sort of the consumption space in general. It's really, versus the sort of macro and industry factors, it's a lot about the individual company, their value proposition, how they're positioning, how management executes. So there's definitely opportunities in that space. But there are some broader trends that are creating opportunities sort of elsewhere in the region. You've probably noticed in areas like cosmetics, the growth of things like independent brands, a lot of them driven by celebrities in some cases. There's a lot of supply chain companies that are benefiting from that, particularly in Korea. So ODM companies that are, really provide, the right formulation, packaging, etc. So that's created, definitely some interesting opportunities in that space. And for a lot of them, what's also interesting is that they have capacity in the US. So with everything that's happening with tariffs and that sort of thing, a lot of them will actually be beneficiaries having that capacity, set up in the US and are well positioned to benefit from some of those trends.
What about in Hong Kong? I mean, sitting here anecdotally, I feel like, some of the sentiment in Hong Kong, in the city is starting to come back a little bit. Would you agree with that statement? And also just looking at, the Hong Kong stock market performance, it has led the Chinese market quite a bit. Some people would think this is a bit of a leading indicator to, improvement of sentiment.
Yeah, Hong Kong stock market is definitely doing very well so far this year, right? But if you look at the retail side of things, it's actually weakening quite notably. You're seeing all these close downs in the catering sector. I think there are two notable trends that I can see in Hong Kong. One is you read a lot from the news flow. Hong Kong people are going to Shenzhen to consume. The other trend is that a lot of Hong Kong local artists are going to mainland China for better career development. So both of this trend, I think, demonstrates the fact that we previously discussed China is innovating.
Mm-hmm.
China is climbing up the innovation ladder, right? So previously, 20 years ago, when I was in Hong Kong, Hong Kong people was not willing to go to Shenzhen to consume because the service or products there was perceived as low quality, right?
It was
but now
inferior.
It's very, very different, right?
Mm.
And also the artist trend is the same. 20 years ago, entire mainland China is watching all the content generated from Hong Kong, but now it's completely the opposite. Yes.
Okay, so I think that unfortunately brings us to the end of this conversation. We've run out of time. Certainly from my perspective, I think, while there's still risks out there, we heard enough, I think, on the macro side and around some of these trends that seem to suggest that there is a good, strong foundation for Chinese consumption for a more lasting recovery going forward. And that's going to be really important, as you mentioned, Taosha, for sort of consumption making up a greater share of Chinese growth going forward. But to me, the takeaway here is also one where those macro headline risks are starting to be outweighed by some of these really interesting bottom-up opportunities. But you've got to stay focused on fundamentals. You've got to remain selective, and also don't underestimate some of the innovation that we're seeing on the ground in China as well.
Absolutely. You started this conversation by saying the China consumption story is complex. It's definitely complex. It's evolving. It's changing. And I think it's fascinating. I mean, from an individual behavior perspective, there's the macro factor. And there's also, the bottom-up change in preferences and tastes that we talked about. And if you look at the China consumption companies, they're also coming up with very competitive, very innovative product, as well as disruptive business models. And I think this has global implications as well. Global companies need to fight harder to keep their wallet share in Chinese consumers, and they also have to face consumer companies in their home turf as they are expanding internationally.
So that's all we have time for this month. So thank you to our guests, Cynthia Chen, Nicholls, and of course, Peiqian Liu. You can find out more about the topics that we've discussed today on your local Fidelity website or fidelityinternational.com.
If you enjoyed today's episode, please do share and subscribe.
For now, from me and all of us at Fidelity, goodbye.